Hello, friend. It's Carm Capriotto with a special recording from Apex 2019. I'm with three important influencers in the industry to talk about consolidation trends. That includes important talk on succession.
You don't have to think about a specific exit, but think about running your business well so you have options. And that's always the better outcome. Sort of let things just sort of unfold. And that way, when you're ready, you can either keep the business, pass it on to the next generation, or if a buyer comes along at the right price, consider selling.
Welcome, Aftermarketers, to Remarkable Results Radio. Listen to learn just one thing from today's episode on your journey to remarkable results. Hello, friend. Carm Capriotto, the Automotive Aftermarket podcast guy, striving to bring the essential voices of the aftermarket to you free and on demand and available anywhere in the world. I'm the founder and host of Remarkable Results Radio, the Town Hall Academy, and the For the Record podcasts. Hey, a moment here for Apex. Did you get to Apex 2019? Well, if you did, you saw their commitment to presenting leading-edge technology from suppliers, but also a great job of showcasing the emerging technology of tomorrow. Next year, an entire floor will be dedicated to Repair Shop HQ. You've got plenty of time to plan for 2020. November 3rd through the 5th, 2020, Apex. Now more than ever. Hey, there's a new page on my website that guides you through signing up for a free subscription for all three podcasts that we produce each week. Go to remarkableresults.biz/listen on your desktop or smartphone. Hey, I had the honor to moderate a panel at Apex 2019 that looked at consolidation trends, challenges, and opportunities over the next 10 years. Every aftermarket professional who's in it for the long or the short haul must pay attention to the changes brewing when it comes to keeping up with tech, running a strong business, or buying and selling your business. My panel brings a wealth of knowledge to our topic and includes Jason Rainey, the Vice President of Napa Auto Care, Greg Bunch, President of Multi-Shop Operation Aspen Auto Clinic and President of Transformers Institute, and Rick Schwartz, co-founder and CEO of Schwartz Advisors, LLC, a mergers and acquisition advisor and management consulting firm to the automotive industry. Find detailed talking points on the show notes page at remarkableresults.biz/E514. We were on stage at Apex EDU and covered topics that included a study that said by 2020, 50% of mom and pop shop owners wanted to be out of their business. Well, that's a sobering fact. That you could also consider selling to a consolidator. But however, don't be worried that you will have to look for or find a venture capital investor. Many shop owners are looking to expand, and if you are selling, how to prepare and understand how buyers value your business. Yeah, I got a great panel, and we've got an awfully great topic to talk about this year, since consolidation and succession planning are on everybody's mind, and what's the aftermarket going to look like down the road. So we're here to talk about Aftermarket 2030, consolidation trends, opportunities, and challenges for the independent service professional. Jason Rainey. Jason Rainey is a general manager of Napa Auto Care, a program of more than 17,000 independently owned automotive repair facilities that have chosen to partner with Napa. Next to Jason, on his left, is Rick Schwartz. Rick is the co-founder and CEO of Schwartz Advisors, LLC, a mergers and acquisitions advisor and management consulting firm to the automotive and heavy-duty transportation industry. Prior to forming Schwartz Advisors, Rick's career included senior executive positions in sales, marketing, and finance. And now, Greg Bunch. Greg is the owner of Aspen Auto Clinic, a 5-location automotive and service business in Colorado. Now, Greg started his passion for good cars when he was 15, when he began rebuilding a 66 VW Bug. He moved from a Volkswagen mechanic to an ASE master technician to management to starting his shop 18 years ago in his garage to an award-winning multi-location business. Greg is currently a board member of the STEM-based charter school, AIST, Automotive Institute of Science and Technology, and Greg is also on the leadership committee of Car Care Professional Network, right here at the Auto Care Association, and a certified instructor for the WorldPAC Training Institute in and CTI, CarQuest Technical Institute. Greg's unwavering passion for the industry has also led him to form a company called Transformers Institute. It's a coaching and training company dedicated to transforming the automotive aftermarket and to help shop owners grow. Our whole objective here was to bring for you and to our listeners in the future 3 distinct points of view on consolidation opportunities and the fact that according to a 2019 Bolt-On and P10 survey, where's John, of respondents, 30% of the respondents plan to retire in the next 5 years. Well, just take the number of shops that we have times 30%. That's a whole lot, okay? Now that's that stat opens up a lot of opportunities in all segments of the aftermarket to acquire bays. And acquire bays doesn't necessarily mean big buying little. It means our service professionals just in their own growth mode. And so you may have a succession plan to sell, or you may have an opportunity to buy. And that's what we're here to talk about. So thank you, gentlemen, for being here. Rick Schwartz, I want to give you the first question. Why has there been a lot of consolidation in the repair and service segment?
Well, Carm, I think there are 3 themes that we've seen on why there's been so much consolidation. First, for investors, they've seen that there's a good return on investment opportunity. A lot of shops are profitable. The second theme that we've seen is a lot of fragmentation. So when buyers, whether it's a shop owner looking to buy more shops or an investment company looking to invest in the industry, when they see a lot of different service and repair facilities out there, they look to try and get some efficiencies by owning multiple shops. And I think the third, which is more of a general theme, Carm, is there have been so many successful investments in the aftermarket, not just in repair and service, but across everything from distribution to manufacturing and all other parts of the industry. So when investors see some companies doing well in the aftermarket, they want to find the next investment opportunity, and a lot of them keep coming back to repair and service.
Expected trends, what do you see coming up? Is there going to be a whole lot of M&A going on?
Well, I don't have a crystal ball, but if I did, I would say the answer is yes. And I think we're going to see a lot of...
Well, I think because you're close to it.
Yeah.
And you can't tell us anything.
We're going to see a lot of M&A for a lot of reasons. Yeah. First of all, there's a lot of companies, as I just said, that have done well. So a lot of the investors are saying, where's the next investment opportunity? Second, there's a lot of money available for investors. Even though the economy at times can be a little jittery, there's still a lot of stability in terms of capital available for investors. But Carm, we look at the vehicles in operation, we look at the VIO, we're coming close to 280 million cars on the road in the light duty segment. We look at the average age coming very close to 12 years. We look at vehicle miles traveled, all the different factors in play here. Those are all very attractive to investors. So we're going to see a lot more M&A in the coming years.
A lot of good leading indicators. Where is the trend? Where's there been a lot of consolidation? Do you see it in collision, tire, repair?
So we've seen a lot of M&A in collision, and I think anybody who follows the industry has seen what's gone on with Caliber, Service King. Recently, there's a big deal done with Joe Hudson's, another big regional chain of collision centers. So we'll probably continue to see collision centers getting consolidated because the private equity world owns companies, so they're going to want to look for other regional chains or even individual shops to buy. But one of the other dynamics that is in favor of M&A in repair and service is the repair and service shop is touching the consumer, the vehicle owner. So whenever there's an opportunity to do some kind of mergers and acquisition activity, whether it's a tire dealer or even in quick lube and car wash, there's going to be a lot of different opportunities across the spectrum of different kinds of repair and service operations.
Great. Thanks a lot. Appreciate that. Greg?
Yes, sir.
Why are shop owners desirous to get out and retire?
There's multiple reasons on there, and there was a study done in 2015 that by 2020, 56% of current mom and pop shop owners wanted to be out of the business. And that doesn't mean they're just going to close their doors and go away. It means they want to pass it on, They want to sell it. Some of them do have that in mind where they're just going to shut that down. And the reasons are the financial investment, that they continue to make less and less money each year. Having employees is harder and harder to find, hire, train, and maintain and keep those folks. Technology is passing them up. And so these people that have, when I call a mom and pop shop is 3 to 4 employees, they don't have a prime location. They just don't have the financial wherewithal to keep up with what needs to be kept up with in this industry. And they're tired. They're aging out. They're in that, late 50s, early 60s age bracket. And they just don't have it in them to move over the next 5 or 10 years to make those changes and adjustments to move into the next century.
There may not be a great business to buy, but a good location.
Yes and no. What I have found, most of these mom and pops, they don't have great locations, and that is absolutely working against them. They're in industrial condominiums. They're on Automotive Row. They haven't built a brand, and I think as we'll continue, as I'm sure Rick will address more through this conversation, that the big guys, they don't want something on Automotive Row. They want a standalone building. They want bays facing the main street. They want to know that you're selling a lot of tires. They want a management piece in. And so for somebody that thinks that they're going to get the same multiplier, somebody that has an organization or business like that, it's going to be a rude awakening.
So the warning to a single shop owner who's about ready to expand is, even though it may look attractive and everything, stay away, be careful, forewarned.
So if you're a single store owner and your eventual plan is to sell to a consolidator, there are things that need to be thought about. And that is, if you're in a bad location, save up your money and try and get to a better location. Too many shop owners are like, they're just thankful they got such low rent, when really that's not what they need to be looking at. They need to be looking at location, if their plan is to sell off to a consolidator, and be looking for opportunities similar to that. And then as we'll go further in this conversation, a term that I've coined, absorption, where some of these mom and pop shops, there's just not enough there to take over as a different location. And we've done this 4 or 5 times where we've absorbed their staff, their equipment, their phone number, their database. And so we've just brought them in because we've got big shops and we can handle that.
Business goes away and you just consume whatever assets are valuable.
Right.
Okay.
And there's a whole marketing strategy that goes into it, because, those customers that have been going there for 30 years are going to be nervous. And what does this really mean? And so there's a strategy that goes along with that.
Another thing we've seen, the question, why are shop owners looking to get out? Sometimes when a shop owner owns the real estate for their business, they have to make a calculation at some point. And as Greg said, it's getting more expensive to operate because you have to make the investment. But if there's a situation where you can sell your business, keep the real estate, which is usually separate from the business, but then have a good tenant come in and sign a long-term lease, what we've seen is a lot of business owners, shop owners, make that decision to go from being an operator of an ongoing business to being a landlord for the person or the company that buys their business. So it may be a better financial decision for them over the next 5 years.
Great point. Thanks, Rick. The reason Jason's with us is we don't survive in the automotive aftermarket as service professionals without a great relationship with our suppliers. So I think what Jason's going to tell us here today is, I think, really important to listen to. So Jason, how are distributors looking at consolidation amongst the service professional? Are you there to support them?
The consolidation piece, it's really ramping up right now, but it's been going on for a long time. And we've been seeing it on the distribution side, and we've been seeing it on the store side. And so we've been pretty aggressive on the store side. And part of the Napa model is we work with independent store owners. So we're familiar with it. When you look at where the shop piece of it is, I think what makes this so interesting is because of what you guys just described, 30% retiring, what's my plan? And I think in some cases, it's a good thing. And so those are the ones that aren't going to make the investments into technology. We know what's coming around the corner. We know we're going to have dedicated bays to specific repairs only. So there's going to be some big investments for it. I think we're right to assist our shop owners in that because we have a history there. We have a brand. We have a network. We have the tools, and I think we're excited about it in a lot of cases. It's an opportunity for everybody in the aftermarket.
You obviously want strong customers.
Absolutely. And I think 5 years from now, 10 years from now, that's what most of them will be.
Rick, who are the buyers in a lot of these transactions?
Well, we see buyers of all types. We see the private equity firms come in and they're buying some of the larger businesses.
I mean, that's way above anybody's think in this room. Am I right?
I'm sorry. What?
This is way above private equity people. No,
not necessarily, because private equity, when they come in and they buy a business, and we read a lot about private equity in the press, but they might buy a company, let's say Caliber Collision. All of us know Caliber. So they own Caliber, but then they might look to buy another local independent collision center. So the private equity firm might not be directly buying the next collision center, but the company that they own is buying the business. So private equity is actually fueling a lot of this, and it's creating a lot of interesting opportunities. But, Carmen, we also see individual shop owners who are looking to buy someone in the next town over or someone else. A good friend of ours, he owns 5 shops. He just recently bought a 6th shop, and he's just a good operator who's looking for some of those opportunities to add. So it's not just the big financial guys. It could be the local guy, someone like Greg buying his next shop.
And that's what we're seeing as well.
So with you guys, is he doing that because he's looking at an end result of selling 15 shops to a big consolidator, or is he looking for that revenue from those 6 stores, 7 stores? Like, I'm going to make my money now. What's his exit strategy?
That's a good question. He's young enough where he still has a lot of time where he wants to work. So for him, it's more of a opportunistic business decision where he's got some good systems in place. And he said, if I can buy a shop in the next town over, I can take my systems and apply it to that shop. It gives me maybe a little more buying opportunities with my distributors where I'm buying more parts, so maybe I'll get a better price or a better program. And what he said is, I don't know what my exit is, and that's okay not to know, but he said, I want to have options. And that's something we tell all business owners. You don't have to think about a specific exit, but think about running your business well so you have options. And that's always the better outcome. Sort of let things just sort of unfold, and that way, when you're ready, you can either keep the business, pass it on to the next generation, or if a buyer comes along at the right price, consider selling.
I love what I'm hearing, and I hope the audience is hearing the same thing. If you've got a well-running business and you're looking to expand, you're not going to put yourself in a corner with the kind of M&A that's being done and strategies being done. You could have 5, 6, 7, 8 stores, amass yourself a hell of a business with a great NOI, finding someone willing to take you out with a big multiple and make it all worthwhile. I mean, like you said, if you got 15 years left, go for it, because the opportunity is huge. If 30% are going to look to retire, sell, like you say, absorb out assets, wonderful.
Right.
And I'd love to have hands raised. Who are multi-shop owners here? Okay, 2. Of the shop owners that aren't multi-shop, do you have plans for an expansion of this style to your second store, say on the horizon within the next year or 2? So I saw 1 hand, 2 hands go up. Okay. And the rest of you are bashful. Got it. Okay. I understand. Hey, Greg, where do you see the opportunities for independent service professionals who want to grow? I think that's kind of where we've just been hitting.
Absolutely.
Right? Yeah.
I think there's going to be more opportunities that we can look at than we'll be able to handle. I think looking at the lowest piece would be that absorption, where you could buy out somebody that's retiring, take on a key employee, take on some equipment, phone number, marketing, that kind of thing. I think there's going to be a lot of that available, all up to what Rick was talking about, a shop that's maybe in a competitor or in the next town over. And again, people that want to retire, those opportunities are going to be available. There's kind of a niche market, for opportunities. Most of your European specialty shops are owned by technicians, and they, maybe they started at a Mercedes-Benz dealer, and so they started a Mercedes shop, then they went in and now they're doing European cars, but they're still actively involved technically, they're actively involved in their business. What I haven't seen is any kind of bigger consolidators, and Rick, correct me if I'm wrong, that are really looking at that model, because it is the amount of technical training and equipment to do that model versus a brake and tire shop is that much greater. And so if somebody's a really, really good European shop owner, operator, and if they continue to work on their business acumen, I believe that there's a kind of a niche market to be a multi-store European shop owner. And I think that's an opportunity not a lot of people are looking at. I know I've got a few clients that are, and I really think there's a niche available there as well.
Hey, Carm here. Apex 19 is in the record books and brought the best and brightest together to create an experience like no other. Now, the big announcement for Apex 2020 is a dedicated section for the service professional. Yay! Apex will present Repair Shop HQ in its own section in 2020. So, if you earn your living in the aftermarket, Apex is for you. Sure, SEMA's fun, but you'll learn more and see more that relates to your sales growth, profits, productivity, and technology at Apex. And training, Apex will present some of the best aftermarket technician trainers as well as management trainers. Now, regarding emerging tech, Apex will feature again in 2020 the latest trends that will have an impact on the service repair professional. And equipment, wow, see, feel, and touch the latest tools and equipment that will bring efficiencies to your business. Mark your calendar right now for Apex 20, November 3rd through the 5th in Las Vegas. Listen here to learn all about Apex and when you can start registering.
We've done podcasts on succession planning, and very much unique and separate channels we've gone down in this entire discussion, and it's great to have the panel with this level of this view and specific specialty in the industry, distribution, M&A, and shop owner. So let's jump a little bit into the weeds here. Greg, what are the threats to an independent seller to get a great price when they're considering selling?
What are the threats? Great question. Themselves. Too many shop
so
owners.
Who out there agrees with him?
Too many shop owners are doing the job. So if I go to buy a shop and the owner is running the shop, they're writing the service, they're doing most of the work. And I have a slide on one of my presentations where the owner is in the middle of the slide and all the spokes and everything that the business is goes around them. If I take that person out, what happens to the business? I have to have somebody that I can plug into that role, that can be very successful and is strong and has leadership and management or technical skills, whatever that looks like. And that's going to be a challenge for me as the buyer of that shop. Now I'm going to get it for a better deal. It's a fixer-upper, right? It's a car that needs an engine overhaul or a valve job. But if I go in and I just said, hey, I want to buy something, I'm willing to pay a higher multiplier, and it's running well, it's got a manager, the manager knows what's going on, he's seasoned or she, and they want to stay in that business, and become part of something bigger, that's the shop that I'm going to pay more money for because it's worth it. I don't have as much work to do to get that in the fold, start doing a few tweaks and tune-ups, and then move on to the next one. So,
aged staff, poor location, all of those are challenges to actually get the kind of money that you would expect. We did a show, and shop owners will look around and take inventory of their equipment and their inventory and say, wow, I have a $500,000 business and $500,000 of assets, so I want $1 million for my business.
Yeah, that's the joke. It's always $1 million.
It's always $1 million. And when a sophisticated buyer, let's put it this way, you don't have to be a sophisticated buyer to go in and have the right guidance to look at the net operating income and realize what you're getting. I mean, you're really paying for cash flow.
Well, as a shop owner who's looking to make an acquisition, or even if you're a consolidator, one of these private equity firms, one of the threats that you mentioned or you asked about, Carm, is if the buyer doesn't know exactly what they want in an acquisition. You really have to understand what it is that you're buying, why you're doing it, and how you intend for that to help your business. It can look real enticing to buy something because it's maybe not run that well. And you can say, hey, I'm a good operator. I can fix that. Or you might look at something and say, it's geographically close by, but then you don't account for the traffic and the time it's going to take to go back and forth, or even just the difficulty in when you buy something, what it's going to take to integrate that into your business. So sometimes the best deal is the one that you don't do. But if you're going to do it, and it doesn't matter, if you're a service or any industry, you really have to have a very clear idea of and a disciplined approach to what you're doing.
So what you're saying is walk away before you get into trouble. Don't fall in love with the deal. You fall in love with the numbers at work.
Yeah.
Yeah. I tell people if an opportunity comes before them, let's talk about why we shouldn't do it. And let's start overcoming it that way.
At first. Why not to do it? Yeah.
In fact, I was helped a friend of mine look at a second shop just very recently. And, at first, all the numbers look good, location, and then you start digging and you find out there's some issues there. And then the decision has to be made. Like you said, technicians, that's my background. We like to fix stuff up. This is more of a fixer-upper than what he thought it was going to be, for sure. He thought it was going to be an easy transition. And so you got to weigh that out.
I can do it. How
much more is it going to cost in not only dollars, marketing, labor, your time? What's that worth? And so, I'm going to assume, talking my connections in the M&A world, is they're looking for something that's running good. They're not looking for fixer-uppers. They want something that's already up and running, profitable. The management team's in place, because they're looking at the dollars and cents investment-wise. They're not looking to have to rebuild something.
Most buyers are like that. There are some buyers that do specialize in buying businesses that need to be fixed, and that's their specialty.
Right. But they're geared for that.
Yeah, exactly. They're geared for that. So you really have to think through, what am I doing? Why am I doing it? And how is it going to help my business? And you also have to see, what role, if you're a technician who's become a shop owner, do you want to be working on the cars, or do you want to be working in the business? So think about how, you want to wake up and spend your working days.
I think where Greg was a moment ago is spot on. I think for us in the independent side, especially on the banner partnership side, is getting our owners that want to expand ready to grow. And they have great businesses. They're not suffering from the technician shortages as much, but they're comfortable. They're complacent, and maybe they're doing a little bit too much in the business instead of working on the business. And I think from the distributor side, our job is to help with that journey. And maybe that's coaching leading up to it, whatever that looks like, and then really kind of set the table for them, help them find these shops so that they can just kind of be normalized a little bit in the experience. But I do feel like from our side, because one of the things you ask is, where can the distributor play a role in this? And I think that's going to be really the next step, right? I mean, the parts purchases come after. It's getting them ready and putting them in a good position, whether that's staffing, finding locations, and who knows, maybe even helping them resource some financial backing.
Do our salespeople that work for our suppliers that come in, are they smart enough to know what it takes, the challenges to run the business? And if they are they deciding to provide a little bit of it?
I wouldn't say, is it a matter if they're smart enough? Because I really think they are.
Yeah.
I just don't think they've been taught. And so they're really good at selling parts. And that's how we've been for the last 100 years. What they don't understand is today, if you can sell the knowledge, the programs, that the parts sales come after that.
You're doing a lot of training to help your service professionals to stay in business.
We are.
How are the classes? Well attended?
It depends on how organized it is up front.
Okay.
And so, but where we've been and where we've really gotten the juice behind it, they're very successful. Yeah.
Good to hear.
I have spoke on this at the World Pack Expo. I'll be speaking again at Vision and at the upcoming World Pack Expo, a specific class for people that want to go multi-store. I had 3 or 4 people come up to me afterwards that have built a relationship, and I'm helping them go multi-store now. And I had 3 or 4 people come up to me and said, "Thank God for your class, because I know I'm not ready." And so at least because what I don't want to happen, and I'm sure everybody in this room and you guys would agree, is, hey, let's help all these people become consolidators, and then they don't have the skills, the infrastructure, the financial capital, all those things that are going to put them at risk. And now instead of having one great shop, they're out of business, or they have to go out and then they shrink back, and the reputation that in their community, what that's going to look like, and it's not a good thing. So my hope is to be able to bring education to a point where people can learn how to do it successfully. And I'm not the only one out there, I'm sure, that has that ability to help people do that. But it's not something to go out alone. If you've got one good successful shop, that does not mean you can just go out and duplicate that. There's other layers of knowledge, information, leadership that you need to have in place to make that successful.
So you're really trying to help failure rates and all the stress that it takes for growing. I mean, because there's a smart way to grow.
Right. And and going off emotion, falling in love with the shop, hey, this, my neighbor, and I did that. I was presented an opportunity on a Wednesday for a shop that was for sale, and I was running it the following Tuesday. Now I learned a lot.
Regret it today.
Now I don't regret it.
All right.
I learned a lot. I would never recommend a client to do it that way.
Right.
That was trial by fire, but opportunities like that are going to come by. And like we said, the more the people are aging out and want to get out of this, the more of those desperation type of opportunities are going to be available. And to Rick's point, how do you evaluate that? Is this really going to be fit within my portfolio or not? And not letting emotions get involved, not falling in love with that opportunity or feeling sorry for somebody, but doing a strategic evaluation and going, okay, is this really the best business decision for me?
What a perfect segue into our next question, Rick. How do buyers value businesses?
Obviously, looking at financial performance is the first thing we look at when you're buying a business. And there are some differences if you're buying, a huge chain, multi-million-dollar chain versus maybe buying a shop. But the basic philosophy is the same. You look at things like profitability, how profitable and how sustainable has that profit been. We do hear the term multiple, meaning a multiple of your profit or a multiple of your cash flow. So there are some industry standards that the standards change a lot, but there's certain multiples that are standard for what does one type of business sell for versus another. But then there's also some businesses that sell for their asset value. Mm-hmm. So it's, how much inventory do you have? How much fixed assets? So, it's basically looking at a couple of things. It's your financial performance in terms of profits, your financial performance in terms of the assets on your balance sheet. Then the intangible part of valuing a business is what is the strategic value of a business to a buyer? Can they see something that they'd be willing to pay maybe a little extra for because the acquired business is bringing something that the buyer does not have?
Right.
So it's definitely a lot of science in terms of the looking at performance, but then there's a little bit of art that goes along with the science.
So we were kind of goofing about I want $1 million.
Right.
And my business kicks out $100,000 a year in net operating income. And I want to earn more. I want to earn $1 million that makes 100. The reality of you just said, and I think everyone in here needs to understand what a multiplier is. It's really the blue sky, which is what people want over and above because they've run a great business and they've been a great leader and they're not the center of it and their culture is on top of the world and their customer base is unswerving. And I want people to understand, and if you guys want to chime in about that the multiple is the blue sky. So if I want $1 million for my business and you have $100,000 bottom line, that's not big enough or strong enough to get any kind of multiplier to give you your $1 million.
You're right, Carmen. I think as a business owner, if you're thinking that there's going to come a time when you want to sell your business, some things that we strongly encourage people to think about is how will that business succeed after you? Now that assumes that you want to leave the business once it's sold. You may want to stay on, but if I'm a buyer and I'm buying a business, it's very risky. Is everything going to go away? Now, I may not know what customers are going to drive in on any given day, but I want to know that the techs are there and that they're going to be there. I want to know that people will keep the business running even if the owner's gone. So if you're selling your business, the more you can do to make the business ready to stand on its own without you, the more a buyer might be willing to pay for it.
So, Greg, why don't you give us a list of the things that we have to worry about if we want to sell our business?
So, great question. And it starts with the people. And I know that there's different arguments whether you should tell your people that you're looking to sell or not. And I could make that argument both ways. But if it's a business that's set up where you have a management team in place, it's profitable. It doesn't mean that their owner's not involved completely. A lot of owners still do the bookkeeping, the marketing, and some side things. But the owner, you need to be out of the day-to-day operations in order to get the most amount of value for it. I'm not a believer you go out and buy all brand new equipment because it's like, do you finish your basement before you sell your house? You're probably not going to get everything out of it that you put into it, but you need to have good equipment in there, technicians that are willing to stay, that've been there a long time, customer base. Do you have good Google reviews? Do you have a good reputation in the community? Are you growing? Are you shrinking? All of those things go into those factors. And then on the flip side of that, as a seller of the business, we were talking about multipliers, and depending on where you are in the country, I've seen from 1 to maybe 4 multiplier of EBITDA. So, income before tax, depreciation. And so let's say a shop owner has a $250,000 EBITDA. So they make W-2 $100,000 and the shop makes another $100,000, and then there's another $50 in add backs, meaning their company truck, their cell phone, their depreciation, that kind of thing. So we're at $250,000, and they want $1 million for it. Well, shops are not going for much more than a 3 multiplier, so that's a $750,000 sale price. Now you take the commission if you're going through a business broker, you take that out of there, you take Uncle Sam out of there, you take a little bit of debt that you got to pay off. So maybe that owner's left with $400,000, and so they thought they're going to get $1 million, invest it, make 10%, and right off into the sunset, and then they realize I'm only going to walk away with $450,000. And I'm going to have to go get a job somewhere else.
Yeah, my check was for $750.
Right.
And oops, what happened?
Right. So they've got to get those things fixed and grow that shop to a point. If that's what they need, if that's what they want to retire with, they're going to have to put probably 2, 3, 5 years of hard work into it to build it up to a point where it's really now sellable. And it's going to be, I know there's going to be a lot out there, but I still think it's going to be a buyer's market because I think there's so many people that are going to want to sell that the people that are buyers are really going to have a good choice of what they want over the next 5 or 10 years.
So you're almost saying you may have to accept a deal. It may not be exactly what you want.
Right.
So start running a much better business. I mean, you start paying attention.
Right. And then they're going to want to keep their business because they're like, hey, I've never made this much money in my life.
Yeah, that happens, right? I turned it around, and so why should I quit? Right. Why should I leave? Why should I retire?
And that's what Rick said. Yeah. Give yourself more options. There's too many people that have backed themselves into a corner and they literally have no options.
Any
No, I think the other thing that I would add, and you touched on it earlier, is right from the beginning when you talked about telling the people. Sometimes the answer to selling your shop is your people. And I think in certain cases, that succession planning becomes very important too. And maybe that's one way to make them part of that process. And we're seeing some of that in our network right now as well.
Excellent.
Just a side note on that. Being that we have a parts supplier up on the board here, I think as shop owners need to look at that of who their strategic partner is with their parts purchasing, because if they're not locked into a relationship, no matter who it is, there may come a day where they really need that help from their parts supplier. And if there's a strong relationship and a partnership built, that can be a very positive thing that can get somebody over a hump. If if they've got their business spread out with 5 or 6 people and lowest bidder, they may come that when they need support, that may not be available for them.
That's a great question, Jason. I'm a shop owner, dedicated and loyal giving you 80% of my business, and I see an opportunity to come up. I'm going from single to multi. I've listened to this man over here. He's taught me. What kind of tools? And I want to pick up the phone and call you. What do you say to me next?
No, it's a good question, and certainly something that we're absolutely faced with. And it doesn't matter which distributor you are. I think there's a couple ways of looking at it. It's what do you have today versus what do you need to be able to provide tomorrow. And certainly with our program, obviously we have our own shop management system. We have our own training. We have our own program. We have our own banner. We have our own brand. But I think, and those are good opportunities to help shops. But I think tomorrow, and I touched on it a little earlier, that may include, do we find the location for you? Do we work together to identify where the next opportunity is? Do we look at financing? And is there ways where we can help back that? Again, not saying that, that can be fully done, but I think those are all the things as a parts partner that we need to be looking towards, as well as the coaching, like we talked about. And like what you're doing is to make sure that when that single shop owner really wants to go into that next opportunity, are they really truly ready? And so I think those are the tools for a distributor that we need to be looking at to be able to kind of bring this thing as buttoned up as we possibly can.
Great answer. Thank you. Let me make a comment. Sometimes we're looking for a tech, and what do? We ask the guy in the tool truck, right? And so if we're looking to grow into multi-store and I pick up the phone and I call Jason's equivalent out in the field and they go, well, you've got all these Napa car carriers in the area.
Yeah.
Do you know anybody who's been whispering about the fact that they might want to get out?
Well, there's no doubt, Carm, that's the biggest challenge, right? And I think for our shop owners in the room, if I asked, could you use a tech right now, every one of you would raise your hand. Average age of a technician is 55 years and or older. You got to look in the schools. You got to look in the trade schools. You got to look in the special markets. But what we just did less than a month ago is we launched a full-blown apprenticeship program through the Auto Care Network. And basically what that will do is it's structured curriculum. It's certified by the Department of Labor. And through a 2-year journey, you can grow your own. And the nice thing about growing your own, there's no bad habits. They remember exactly who did it. So I think our goal from our member network, or their expectations for us, is give us the tools and we'll do it. And so that's just another way where we need to grow this technician market. We can't just keep talking about how much of a problem it is. So that's just one way where we can help.
And that goes back to what I said about the relationship with parts vendors that are invested in what we do. Chris Chesney's in the house, and he's got career path. He does a lot of technical, through Advanced Auto Parts, CarQuest, WorldPack. A lot of opportunities on that side too, and so I'm glad to have Napa and Advanced WorldPack helping the independent shops. I don't see that coming from the other part suppliers out there, and I think that's part of that strategic partnership when you are looking to grow and expand, is what tools are available through the people that I buy the parts from.
Assumed benefits from growing, consolidated management.
You just double your money every time.
Oh, yeah.
Just kidding.
How do you see
it's
that?
It's more like whack-a-mole. No, I see, software-wise, if you're doing reprogramming and you have that subscription, you can have, hey, I'm going to reprogram a Chevy. One of your 4 shops has that. You can reprogram the BMW of somebody else's, so you can share the load if you're going to get into ADAS adjustments. Maybe one of your shops has the ability to do that. You can move people around. That's I want to send people to training. Well, you need coverage for the shop. You can move people around. There's a lot of economy of scales when it comes to insurance, workman's comp, employee benefits. The bigger your organization is, the better you can spread that load out. And so, somebody that's making a really high profit at one store, I warn them, hey, it's probably your percentage wise is going to go down a little bit because you need to spread that out. And you can't be in more places, but understand that the dollars are going to be greater because you've, you make a smaller percentage on a much higher dollar amount.
Excellent. Thank you. Single store operators, Greg, they're not going away anytime soon. How are they going to survive?
They are going to have to get bigger. We call them garage mahals.
Garage mahals. I love
mahals.
that. That's a great, isn't that a great term? Garage mahals? Big.
And I think the last to be consolidated, like I said earlier, is going to be some of the European specialty shops. But I work with quite a few of them now that are doing $3.5 million out of a single location. I think those guys have a long way to go before they're in jeopardy, that they're going to run out of bandwidth. And I see in some areas, I've got a guy I know in upstate New York that's got a $6 million single location, but it's in a small community. It doesn't make sense for him to go multi-store. It makes sense for him to have it all under one roof.
I believe I've been in that place.
I think you probably have.
Yeah.
And so I do think there's a place for that. Not every community, not every area is really geared towards having multi-store. I think that some of these people that have garage mahals, they're doing really, really well because they can overcome their overhead. They don't have a lot of competitors. And so there's a place for both. Absolutely.
So if I have a 4-bay operation, I'm doing $1.5 million.
I've got 4 bays, you're doing good.
Thank you.
Yeah.
If I have enough room on my property, I own it. Would one of the biggest options would be to expand it? If I was in the right market?
If you're in the right market, every situation is different. And so that's where looking at all the options there's no cookie cutter answer to that question.
Good. Rick, you've seen mergers, acquisitions on a real large scale. Does consolidation only impact big national or regional chains, or are smaller independent shops also impacted by consolidation?
I think everybody. The answer, Carm, is everybody. The big chains are what makes the news when there's an acquisition. But as we've been talking about today, the acquisitions could be just a local operator buying or selling another shop. It could be someone who owns a shop, whether they own one or they might own a few shops. They might want to get into a complementary business. So someone who runs a couple of car washes might want to get in Quick Lube and create some kind of total car care type of facility. So the buying and selling of business is not limited to the big guys. It could be just for the local shop owner.
And I've had some conversations with the biggest of consolidators in our industry, and they actually want the smaller shops to start compiling and get up to 5 or 6 shops, because if they do want to ever come in and buy you out, they'd rather do 6, 7, 10 at a time instead of one at a time. So there is, it's not that that's a positive thing to them, that there's smaller level consolidation going on, that they see that as a positive and wish more of that would be going on.
So that's the story from up top, huh?
Yeah, it's a great point. So if you're buying businesses, the time it takes and the resources and all the everything that goes into it, it doesn't matter if you're buying 10 or 20 or 50 shops or you're buying one shop. It's a lot of times the same amount of resources and energy for the buyer. So to Greg's point, a lot of the bigger buyers are saying, hey, let's see some of that M&A on a local level. Let's see you get up to a point where we, the bigger consolidator, can now buy that 5-store chain, because for us it's the same amount of time as it would take to buy one shop, and we need to get a bigger bang for a buck.
And you'd probably recommend that to someone in what you do.
Yes.
Yeah, got it. Yeah. Appreciate that. Jason, you said earlier distributors are consolidating. What does that mean to the service professional if we have less places to buy from?
It goes back to the point that I made previously too. I mean, consolidation has been going on forever in our industry. I think you're going to see more of it at the distributor level as well, whether it's regional or even global. I think what's going to happen is you will have less distributors, you'll have less outlets eventually, which I think, to the other point that we made earlier, is where you need strengthened partnerships. And you really got to make sure that you're in lockstep with your distributor. That's your business partner. That's who you agreed that you were going to move forward with. But I think it's a two-way street. The parts purchases will come with the partnership if you really help them grow and make sure that they're in a good spot to where they're using their resources and the tools that are available to them, and that you're helping them get to where they're going to be. So when we get to that point where maybe there's not as much opportunity for distribution out there, I think that's where you're going to see strengthened partnerships. But you're also going to have more power dealers, installers. And so I think that's going to, over a period of time, kind of take care of itself too. So and I don't think it's overnight. I don't think it's, the point we made earlier too, we don't have the crystal ball right here, but that's how I kind of see it.
Thanks, guys. Thank you for being here. First of all, one heck of a turnout. And, it was great to see Apex announce repair shop headquarters and a real strong commitment to the service professional for next year. And I think about, why are you here? Well, you're here to learn. You're here to network. Many of you belong to 20 groups and networking groups back at home. And, we kind of know, Greg, that business is a team sport and you really can't do it alone. You can't do it in a vacuum. Fear makes you stupid. Remember that. I recently said that.
The joke is they're independent repair shops because they're owned by a bunch of independent people.
That's right.
And so I don't think anybody wants to take away the independence. People have very successful businesses because of that independent spirit. It's what, founded the United States. So I don't want anybody to think they need to lose that. But there is strength in numbers, and whether that's a strategic relationship with your parts vendor, whether that's involved in a 20 group, a mastermind, whether industry or out of industry. I've learned a lot of my business acumen, not only from being involved in industry events, but going outside of the industry, being involved in masterminds and different programs and CEO groups that are different verticals, and learning from them what made them successful, what things brought them to the next level. And, we were talking about mergers and acquisitions. I know a gentleman that was in the dog toy business, and he had a private equity firm come in, and he was doing 10 million in revenue, and they bought him out they bought 70% of his business, left him 30%, made him the CEO, and now they're going to be eclipsing $100 million and looking to do another flip. If I hadn't been exposed to those kind of things, I never even would have heard that kind of thing goes on in that world. And I know that's going to be happening in our world too. So knowing about those things, I think, is very important. And there's 93% of shops are owned by technicians that went out on their own and started their business. So, thinking that if you just fix the car right and take great care of the customer, that's the foundation of having a good shop. But they need to expand what else is out there in the whole business world, and understanding finance and understanding M&A, understanding real estate, all of those kind of things. We need to be experts in those if we're going to grow our businesses. And that doesn't happen without getting some help.
As the CEO of Transformers Institute, and I think you started to support multi-shop owners, didn't you?
Right. That was the original.
What's the pulse of your clients? What's going on with them?
It's exciting as heck. I got to pinch myself every time we have quarterly meetings, and we talk about what's going on. And in the 15 shops that are in my group, I think we've added 17 locations in the last couple of years, most of them through acquisitions. And so they're getting very, very excited. And we cry on each other's shoulders, that, hey, we just bought the shop. We had 5 great employees, and the manager got mad and left because he didn't get sold the shop. So now I'm scrambling to find somebody. All those fun things go on. But I would say, these guys are very excited about the industry, where things are going, being able to continue to expand their business. And I hear a lot, and this is really cool. And I think you'd get the same vibe the more people you interviewed here at Apex. It's not all about the money to them. It's providing opportunities for their current employees to be able to move up in their careers, be able to make 6-figure incomes, be able to provide better for their family. And if they're just in one small little shop, they can't do that. They know that the bigger they get, the more opportunities they can provide for their people. And that's really cool to see that it's not just, of course they want to make more money, but there's a lot more to it than that.
This event had an awful lot going on about emerging technology, ADAS. I was really impressed with the emerging technology booth that Apex created, and they're busting their hump being involved in having seats at the table of all this. And so with that said, well, where am I going? How am I getting there? What kind of equipment or investments do I need to have? So Greg, back to you again. From your perspective, what type of investment is going to be necessary to continue to run a viable business?
A lot.
Okay, next question. Can you help me round that down?
What's fun to watch, when I started in this business, at a dealership, we were at first couple little independent shops, and then even the first dealership I worked at, there was handwritten tickets. and manually adding up parts and labor and all that. And then one of the first shops I worked at, where I was a service advisor, we were DOS, and we had that, the first service writing program, and we thought we were the cat's meow. And to see
green screen,
green screen. So to see where technology is going, just in the service advising and shop management tools that are continuing to develop, and there's some really awesome up and comers in the software side of things. And I've seen some of the behind the scenes with some of the software that's coming up that's going to make that estimating process that much easier. Obviously, digital vehicle inspections, getting those pictures out to the customers. I think being willing to invest in good software to run your company is going to be important, because it's going to be about bay efficiency, technician efficiency. That's definitely moving forward. Having scan tools, obviously the manufacturers have made their products more available, more price competitive, where you can download the software onto laptops, be able to do programming, that kind of thing. So definitely being able to have the technology to diagnose and fix the cars. We're looking at next year really doing a heavy investment into ADAS, and we have the space and be able to, and I think that's a little bit of an unknown. I'm not saying everybody's got to go run out and do that. Hunter, they're always looking at how to, and I'm sure there's other companies, but that's who we use as far as, making an alignment effective, but be able to do it in a very quick manner. All those things are going to be important investments. People that, at my shop, you can get a alignment done in 20, 25 minutes because of the equipment that we have. When you use older machines, maybe that takes an hour. You add that up over a year. That's a lot of revenue lost because you don't have the equipment to be as productive as you need to be.
Carm, I think two other things I would add to that. It goes without saying, recruiting, and we talked about that earlier, but as a shop owner, you have to be thinking about where you're going to recruit new techs, and also the retention part. The training is a big part of that. So I think the people element of your business is critical, and that's something that as a shop owner, business owner, you need to be thinking about investing in. But and also maybe throw out one other thing that you need to think about in terms of the investment, and that's the experience for the consumer when they come into your facility. You really need to be thinking about who we're competing against, and it's not just the other shops. So what's it like when you go into a Starbucks? It's very predictable. It's kind of homey. It's cozy. So, some places are putting in Wi-Fi. They're putting in, a Keurig coffee maker. You have to decide what's right for you, and you have to think about who your clientele is and what they're expecting. But if they're going into certain other retail establishments and they're getting a certain kind of service, and that could also be a dealer, because I think we've all seen what a lot of dealerships have done with their customer lounges. You need to think about just making sure that your facility is something that a customer is going to feel comfortable driving up to.
Yeah. You can't open a coffee shop today unless you have Wi-Fi. 10 years ago, that didn't matter, right? And I don't think you can open up a service. Actually, I don't think if your lobby isn't up a couple of notches and you don't have Wi-Fi and a place to charge a smartphone and a Keurig, start Monday. Go back to your place and start and fix it.
To your point, though, Cartman, and glad you brought it up. I mean, that's where the consumer experience starts. Yeah. And it starts at the curb and what kind of presence your business makes. And then once you walk through the door and, I'm sorry, the gumball machines and the peanut machines, that's not today.
What?
And
I love M&M. Those M&M machines they're my favorite.
And they've usually been there for a couple of years. But I mean, I think you're right. I mean, you think about when that vehicle's under warranty in these dealerships today, they're Taj Mahals. And then it's kind of a mixed bag when you enter into the aftermarket. And so when you're setting shops up and you're trying to grow that network of, really loyal customers, that's where it starts.
Yeah, we help our clients figure out what their avatar is. Who is their perfect customer? What do they look like? And does your shop match that? And a lot of car guys, they got car posters and NASCAR and everything in there. Well, if your avatar is a soccer mom, she doesn't care about NASCAR. She, what's going to feel comfortable and what amenities need to be geared around.
Absolutely.
If that's your avatar, what that looks like. And so that's a great point. It's not technology based, but it's, if you're not a decorator, maybe hire somebody and say, look, this is the person I want to attract. Hire somebody that knows how to decorate.
Coaching.
In order to make that.
It's amenities and environment, and we can't discount that.
And you know, on the marketing side, you got to think about how people are shopping today. You got to have a website, and it almost goes without saying. And sometimes when I say that to people, they think, well, that's 10 years ago news, but you got to have a website that just has a good experience. It works. It's something I can look on my tablet, on my cell phone. It's simple things like that. And they're so easy to get a simple but effective website. Have good Yelp ratings, whatever you do. People always are using things like Yelp, Groupon. So, just kind of think outside the box a little bit about how are you shopping for things when you're shopping. That's how people are looking for a place to get their car fixed.
A great point, Rick. I was honored this year to be a judge for ASA's top websites of the year. And boy, did I see a bunch of beautiful, beautiful websites. I mean, there's all kinds of, I don't want to say the word investment, but really smart think going into what that first page looks like and call to actions. And, they say it's all about above the first fold. And as someone I interviewed this week said on the mobile device, it's above the first scroll. And so please keep that in mind that your websites are mobile friendly. Jason, 17,000 auto care centers. I mean, you're really in touch with the pulse of the industry. You hear anything about business model transformations? People looking at ADAS. Where are the opportunities for independence coming?
We're still kind of transitioning a little bit. It's kind of interesting. I kind of had rose-colored glasses on, and I thought more of what I would define as a engaged, powered member. I thought that they were a little more connected to it than what they are. But I think a lot of it is just because they're not actively seeing it. But the resources are there, the training's there, the tools are there. So the education piece is certainly taken care of. But I do think that is something that we're going to really have to get serious about, just like what they're doing out here this week. But that's never going to change. That's what it is today. There's going to be something tomorrow. Hybrid's been big over here this week. And so that's one of the things that I think we have to just kind of tap the brakes on, pun intended, I guess. This is always going to change. It always has. Now we're seeing change come at us at a pace that we've never seen before. But I think in a lot of ways that's okay. We just got to really embrace and get on with it. But it's all good.
Thanks for being on board to listen and learn from the premier Automotive Aftermarket podcast. Until next time,